Future Generation celebrated its 10th anniversary through the month of November, and to mark the occasion, we spoke with a whole raft of some of Australia's top fund managers, including Kelli Meagher, portfolio manager at Stage Capital. So we spoke to discuss her involvement with the charity and, as well, a little bit of an insight into her investment strategy. Steve.
Well, I mean, we feel very lucky at Sage to be able to help out. We all love being in funds management. It's a great industry. We're very blessed to work in such an interesting job. And when FutureGen approached us when we first started Sage and asked if we'd be prepared to manage a chunk of money for them pro bono, we were absolutely keen. They've got a broad range of charities that really do good for youth and families, and they're always really good at communicating their work and where the money's going. And it just seemed like a logical thing to do, in the sense that we all would like to do more to help others, but at the bottom line and reality is that we're busy with our work, with our own families, and so to be able to just use our skills to help a charity like FutureGen without actually having to spend time on a weekend or something, just doing it through your everyday job is really a special opportunity, I think.
I think it's so interesting what Future Generation does, because it is all the good and it's for all the right reasons. But you pointed out, it is to make money on behalf of investors. And that allows FutureGen to give back in that meaningful way. So it comes down to the investment strategy that's being deployed by a lot of Australia's top fund managers, including yourself. So how would you describe your investment strategy?
Our investment strategy is, I describe it as a sleep at night hedge fund. Hedge funds sort of get a bad rap of being high risk, but the way we run the fund is in a very tightly risk controlled way. We can go long and short stocks, but the way we sort of group the stocks and neutralise the risks are by grouping stocks not by industry but by macroeconomic factors, so that if we wake up one morning and the US bond yields have gone up or down massively, we're not going to get suddenly hit by an unexpected event, and our performance won't get hit. Like from a macro point of view, we within those groups we choose stocks that hopefully will ride out and perform through the cycle regardless of what is happening in the broader environment. That's a theory. It doesn't work every month, but usually it does. And so I'm really confident with having. I'll put my grandmother in my stock. Our fund, I'd put FutureGen, because we do what we say we do. Like, we are true to label and very risk controlled. So
Great. And just to clarify, so you invest globally and locally?
Just locally.
Just locally.
Yeah, okay. At the moment,
So when you are thinking about what's in store for Australian stocks, clearly the macro is having such a big impact right now, Trump and all of that's to come. But when you take it down to the basics, what does the Australian market have going for it?
Well, I mean, we have obviously a stable political system. We have, the economy's doing okay. We're doing fine. People still have jobs. Yes, the market is trading above its normal historical range. It's about 18 times, and usually is about around 15. So there are pockets of the market that are looking a little bit expensive. But we also, looking at banks, I think the opportunity in the next year is to really get right the banks versus resources thematic, because that's been such a big thing in the last couple of years, and people have been caught out being really short the banks because they are historically and on any level very, very expensive. But equally, resources with China, China stimulus keeps disappointing, and so resources aren't looking attractive today. But over the next 12 months, getting that switch to resources right will be key, I think, in performing. And then, of course, just picking stocks that are not at all beholden to the cycle. I think that's the other trick as well, like to pick stocks that will grow no matter what interest rates are doing. We've got some stocks like pharmaceutical biotech stock, Telix Pharmaceuticals. That's that's sort of doing its thing and getting approvals for its various treatments, and that's what's driving for Telix, not the fact that Trump, says this, or interest rates do that. So that's very much the essence of our fund, trying to get our performance through just the bottom-up stock picking as opposed to the big macro tilts.
Yeah. One of the hot topics of conversation is small cap versus big cap going into 2025. Do you have a clear view, or again, does that just come from bottom-up stock picking?
Well, for us, we are ASX 200, so we do have some exposure to small caps, but not a huge amount. I feel like it's probably more of a US-centric thing because with the tariffs and the onshoring, the domestic economy will benefit from more onshoring of manufacturing and things like that. And often in that situation, it's small caps that disproportionately benefit. For us here, we don't sort of have any strong views about what's better right now. It's just it's very much bottom-up stock picking, and a lot of the tech companies like Life360 and things like that. They're sort of, what are they? It's not a big cap. It's not necessarily a tiny cap anymore. But so no, it's very much bottom-up for us. Yeah.
And so when you are thinking about your biggest holdings, which you clearly don't have to lift the lid on here, but do you reckon that 2025 is going to be fairly positive?
Look, I think so. Look, we might have some, obviously always some ups and downs, but at the end of the day, the inflation's sort of looking like it's in check. Interest rates are starting to come down. I mean, it'll take a bit longer for ours to come down because we're a little bit behind the US, but people still have jobs. Things are pretty good. So I'm a bit of a subscriber to the soft landing thematic, but it's just being really selective on what stocks that you pick, and being really careful about valuations and how much you pay. So
That might be getting a bit tricky here in Australia with some names.
It is indeed. So, we talked recently about the travel stocks being beaten up. So, there's some, we found some value there, with some profit warnings that, give you an opportunity. And then you've had the sort of the WiseTech sort of, all that sort of media attention, and, various moving parts there with the founder stepping back, and that provides an opportunity as well. It's an expensive stock, but it's, we try to be nimble and, look for value when we get the chance.